Hello everyone. I'm going to bring you a story about digital transformation and why banking should embrace open finance technology. Open finance technology is a pretty new concept and it will completely transform the way we interact with banks tomorrow. Now, digital transformation as such is not very new. Although things like mobile banking and PC banking may have been there for years and years. As such, mobile banking only exists for about 10 years, PC banking maybe 20. It's already in 1997 that Bill Gates made a statement, we need banking, but we don't need banks anymore. And that was quite revolutionary. And today is still one of those quotes that is being used as a reason for banks to transform drastically to remain relevant in days when big tech and social media are becoming the norm and start initiating financial services themselves. And that's also where this whole open finance idea comes from. Now, before we go into details, I first like to show you how easy banking actually was in the old days. In the old days, let's say 20 years ago, but sometimes even today. Banking has been a very vertically integrated model. Every bank produced its own products, they sold their own products, and they maintained and managed their own products. It was pretty straightforward. You had siloed product factories, concentration on products to manage, and with a limited focus on service. Suppose you work in a bank, you were working on payments, which meant that you were not working on investments and you didn't really look at the possible interactions a customer could have between those two. That may sound silly, but it was not essentially required in the industry because it was a very closed industry with limited competition. New banks were almost impossible because of the high capital requirements and tough regulations. As a consequence, big banks became bigger and smaller banks would have to merge to create more scale, which would limit the competition even more. Today, all this is under pressure. Under pressure for several reasons. One being the new economic reality, a reality where the main source of revenue is coming under threat for banks. Before, banks made huge amounts of money on the interest rate spread. But as the interest rates went down, so did the revenues that it generated. So they need to look for more returns and need to figure out how to save costs to compensate for the losses they make there. There are new technologies. Of course, all of you are aware of some of those. Mobile banking, artificial intelligence, in the future, maybe even blockchain, but all these things have become cheaper and cheaper. And new entrants got a lot easier in the business. Maybe just with a payments functionality or simply simple investment product, but they slightly grew and grew and grew and became proper and also I would say concrete competitors for banks. New competition was possible because certain banks started selling or renting their bank license to third-party players so they could focus on sales, knowing that someone else took care of all the regulatory requirements. I'm going to give you an example later on in this session. All this changed, of course, customer expectations. A customer today expects different things from a bank than 10, 20 years ago, when everything was still done in branches and there was a lot of resistance to digital. Today, new consumers, they have a lot of resistance against branches and want to make sure that they can do everything instantly wherever they are. That's a complete different mind shift from the customer. Also, the regulator realized that with more concentration in the market and lower competition, there was a considerable risk that banks would start abusing their power. And so they made measures to open up the market. And that's where the whole idea of open finance comes from. Essentially, it starts with one regulation in one particular domain. And that was the Payment Services Directive 2, PSD2, focusing on payments with 4 essential objectives by the European regulator: to increase the level of security and confidence in electronic payments, to reduce payment fraud levels, but more importantly, especially for this session, the inclusion of new players called third-party providers and open the payments value chain for new players. Concretely, banks were forced to invest massive amounts of money in platforms with APIs, application programming interfaces, to be comparable with a tool that makes it a lot easier for other players to connect with the bank. I'm going to give you an example here. Bank by Payconic, they can initiate payments that you initiate in the Bank Contact app, but they will reach out to the bank, your bank, and they asking for a payment to initiate in your name. That's essentially what this is about. Today, there are a few organizations that have a proper business model that is known by everyone. In the near future, we can expect a lot more. And it's not just initiating payments, but also, for example, capturing transaction data and building new business models with the transaction data on which a bank had a monopoly until thus far. That has completely changed right now, and that is also transforming the business. That's not me saying, but that's, for example, Reinout Temmerman, payment advisor at the National Bank of Belgium, saying. I conducted a couple of open banking interviews last year, and one of them was with Reinout, and he said, we serve quite a few startups, existing companies. Of course, they vary in maturity of product development, but I think personally that we are just beginning to see the tip of the iceberg in terms of business models that could be possible to develop under PSD2 and, more importantly, under open banking. Later in this session, I will give a couple of concrete examples, but first I think it's important to capture the main notions of what this open banking actually means. And you could go very far into detail. I'm not going to do that. I will just give you one overview that should help you understand what open banking, open finance is about. And that is the following. To bring clarity in open banking, I think there are 2 main concepts that you should be aware of. Bank as a platform, where a bank will try to create his platform, but with all kinds of services that may or may not have to do with their own offering. Compared to bol.com or, for example, Amazon, who started as a marketplace for selling their products, and they have now reached out to other merchants to start selling products on their platform as well. That way, they more or less killed alternative platforms and made sure that possible competitors need to start selling on their platform. For a bank, it makes perfect sense to set up this kind of business because they would be the first point of contact of a customer, not just for bank services, but for so much more. And that way they increase the number of touch points, the number of times a customer would reach out to the bank. And each of those touch points is, of course, a possibility to sell. So this is the bank as a platform. Amazon, bol.com, they are, I think, the most known concepts of something similar. Facebook as well. They also increasingly more building this kind of platform to make sure that they become the dominant player, not just for social media, but also for gaming, for sales, for etc. etc. Bank as a service is another concept where bank services are integrated on third-party platforms. I already mentioned Bank Contact by Payconic. If this would be too abstract, maybe make the comparison with Google. Google Login today is possible on nearly every website, even if they have nothing to do with Google. That is Google that is providing a service to third parties to make sure they can make use of all the data they have of you. Bankcontact by Payconic is a good example. In the business-related banking, you have Isabel also. There is a cake app, if you know him. I will explain more about that later. And all these things together, and that's something that is slowly growing, but we haven't seen the end of this at all. That's what we call an ecosystem, the whole spectrum of interrelated players and services. Again, I did a couple of interviews, and I'm gonna come back with 2 more quotes to explain you, to show you how banks think of this open banking. First one being Maarten Verboven. Back then, he was Director Open Banking at BNP Paribas Fortis. And what he said was that you'll increasingly see banks cooperate with non-banks. And that's essentially what open finance is about. It's about finding the right partnerships to create more value for your customers. You'll see ecosystems emerge, he said, around themes such as mobility, living, health. What's crucial here is that mobility, living, and health, as such, do not resonate with finance. So what banks are actually doing is figuring out how they are relevant in the things that matter to their customers, instead of letting the customer figure out what he needs and then go to the bank to help him with that. And the question is, he said, the question that banks are asking themselves is when to choose for a bank as a platform model and when to choose for a bank as a service model. And you will see banks that are playing at both ends, of course, all depending on the customer journey and how they believe they can create most value for their customer and for their own business model. That's essentially what open banking is, well, according to BNP Paribas Fortis. I also had an interview with Karin van Hoeken, General Manager Digital Transformation at KBC Bank. And she, well, the quote I remember of her is one with, let's say, the ultimate goal of open finance, in my opinion. The more you can create the ultimate laziness for the customer, without the need to really be there, the more they will appreciate you. So what KBC wants to create is an environment where they can always be 24/7, anywhere, available the moment the customer needs them. Instead of, in the past, the customer needed to reach out to the bank should be able to reach out to the customer from the moment they realize they can bring value for that customer. In creating this kind of experience, she said, you also achieve the new loyalty. That is certainly a big trend. And KBC goes very, very far in that. And I can show you that with the next slide, with a couple of examples. And you see a screen of KBC on the second row, the first screenshot. And that is something that created a lot of buzz in national press because they announced that from very soon they will start providing the headlines of each and every soccer match of Jupiler Pro League. Why did they do that, you wonder? Well, that's what open finance is about. It's about banks that start figuring out, thinking out of the box, what can we do more for our customers to remain relevant? And this could be a very smooth move, relatively low marketing budget to reach out to almost every Belgian that's interested in football, KBC customers and non-KBC customers, and to interact with those customers on moments the least they think about is finance. And that is, I think, very interesting. Now, more concretely, open banking, I think the example of IMOApp is a very good one, with Keytrade serving as bank as a service. IMOApp is a front They sell all kinds of retail, not retail, real estate. That's their business. And now they tuned that into something where the customer can look for the house or apartment he prefers, he likes. And on top of that, thanks to the collaboration with KeyTrade, they can start offering mortgage loans. KeyTrade at the back, selling mortgage loans through ImoApp, looking for more sales by partnering with a third party, beyond payments. Didit is a platform created by BNP Paribas Fortis, and the goal is to help customers realize their dreams. Because they didn't want to be limited to their own customers, they create a separate platform. And on long term, you can expect that more services will be linked to that, more banks will be linked to that, to make sure they have a complete service to help the customer realizing their dreams. Not just putting their dreams online and sharing the message, please help me realize my dreams, dear mom, dad, friend, whoever, but to go beyond that. I'm very curious to see how that will evolve in the future. Jamie by Belfius is, I think, a very neat solution of a bank that figured out how can we bring value to our customers on a non-financial way. With Jamie, they connect independents with people that are looking for someone to help them in their garden, in their house, whatsoever. And that way, they create business for their customers. And business for a customer is business for the bank. Our latest new bank in Belgium is Ion Bank. Banking with the power of AI, they say. One of the reasons being that they will look for you for the best rate on a savings account. That is, a savings account of Ion, or if there is a better player in the market, they will suggest that other player. They go out of their comfort zone and they look the best possible solution for you. That is their promise. That is very neat and that is very open finance, in my opinion. ING recently announced that they collaborate with Mina Technologies, a software that will help ING customers better manage their subscriptions. In times when everything is digital and you just need to leave your credit card ID somewhere for a monthly subscription, this is one of those services that is helping ING to make sure their customers remain financially fit and reduce their financial stress for costs they are making, of which they probably aren't even aware of. I think that's a very smart move. And there is a Cake app. Cake app, I already referred to that earlier. The idea of Cake app is to make banking profitable again. What they do is they provide a platform and they ask their customers to connect all the accounts they have at different banks to their platform. They capture all the data, all the transaction data, they anonymize it, and they make sure that they can get trends out of that, and those trends are sold to third parties. The profits they make by selling these data are divided between their customer and themselves. That way they are creating value, a lot of value out of data, and as a customer, you are sure you get also a piece of the pie. Tomorrow is a German bank that focuses very, very much on green finance. They have a very clear vision on what the future should look like, and they collaborated with Solaris Bank, who is acting as a service, bank as a service. They provide the license, they provide all the backend solutions, the whole IT platform, and tomorrow can concentrate on how to sell their products. That's in this case what banking as a service and the front-end selling actually means. The bank is Solaris Bank. Tomorrow is more or less just a front-end that needs to concentrate on marketing and sales. And that's how today competition, the whole competitive space of banks, is slowly changing. And that is, I think, essentially what banking is all about. Today, we should no longer concentrate on just banking products. It's important for you to at least understand the notion of these different technologies that the future of banking will that will make the future of banking, going from natural language processing, blockchain, artificial intelligence, user experience, cloud computing, quant computing, but all these things need to be set up for a purpose. And that's where you guys come in. What's going to be the purpose of the technology you will activate? Is it going to be the best bank? Is it to be the most relevant bank? Is it to be to create the best possible future for society? Is it something else? That's all up to you, the new bankers, and technology will enable you to realize that. So is banking old school? I'm convinced it isn't. And I hope that you understand now a bit better how open finance has completely changed and will completely change banking as we know it. Thank you very much.